everybody. I know Abby very strategically put me right before the break to make sure that I would be short and snappy. But today I'd like to talk to you about what BNEF does. So we are the Energy Transition Research Division within Bloomberg. So a lot of the charts and the data that you saw earlier in the day, if you looked at the source, that's us. So we write about the things disrupting and supporting the energy transition across energy markets, commodity markets, and then, of course, the sustainability part, which is what you guys like to call your parts of your business. One thing that we're particularly fond of at the very beginning of the year is the release of our Energy Transition Investment Trends Report. This is checking where all the money is going and whether we're actually making progress. It's almost becoming a broken record, but we say every year we're breaking new records. It's fantastic with how much is going into the energy transition today. So 1.8 trillion we tracked has gone into these various sectors in the energy transition. So much so, the growth has been great that total investment in the energy transition has actually exceeded investment in fossil fuel supply specifically. So the 258 billion that was increased in the energy transition spend way outdwarfed the only 95 billion that went into additional fossil fuel supply. Asia, as you can imagine, the lion's share, 47%. This does, however, mask a fairly modest, only 7% increase in spending in the APAC region, compared to 38% in the EMEA region. A lot of factors are going into this, but the key thing is that we have actually seen spending in renewable energy actually recede in APAC in 2023. Again, various factors to this. No doubt, China is still the top investment market with regards to how much money is going into the energy transition technologies. But what's happening is just that some of that is also taking into account the lower cost of solar modules globally and also the lower cost of Chinese wind turbines. So that's actually what's leading some of this. We've got friends in Japan and India actually in the top now as well, more than 30 billion. We're seeing the US start to close the gap. The gap is still very large, but it is closing the gap with the Inflation Reduction Act benefits and effects starting to be felt and being translated into the numbers. For the eagle-eyed audience members, you would have actually seen that this was the first time the electric transport sector actually overtook investment in renewable energy. So that 634 was just above the total 623 spent across renewable energy. With all that renewable energy, we saw investment in energy storage and batteries go up 76%. Again, mostly in the utility scale part of the sector. Investments in carbon capture and storage have been, yes, they've doubled. But what's the interesting trend here is that we are actually seeing bets being placed in multiple applications, multiple sectors, multiple different types of technology. So we are seeing that diversity in CCS investments. On the hydrogen front, the investments in clean hydrogen specifically was 10 billion. But when we look at the broader investments in the hydrogen economy, so the peripherals around those clean hydrogen investments, more than doubling, and that's at 34%. Now, the stark thing that you'll probably see here is that APAC's got the smallest share of that at just 16%, well below those in EMEA. So out of all those investments, are we actually putting them in the right places? Is it enough? Is it fast enough? Are we beating the records every year fast enough? The other thing that we publish at BNEF every year is our new energy outlook. Now, this is our report on what plausible pathways there might actually be to reach net zero. What we do is that we present two different kinds of scenarios. We present the economic transition scenario, this is let's call it a business as usual scenario. It is a least cost modeling exercise where we assume the technologies that will be applied are the most competitive technologies versus the net zero scenario, where we make sure we force those emissions down to zero by 2050, and what are the technologies that can actually get us there. All of this, again, because we choose to model the least cost scenario, this has all been made with just over the years, the learning rate going down and cost overall for these key technologies rapidly coming down. No doubt, the biggest conclusion that we always come to every year is that clean power and electrification are going to be the absolutely biggest drivers with regard to emissions abatement. Now, how do you read this very colorful chart? So, the top line, little dotted line where it says no transition, this is your business as usual. This would be the emissions we would have if it was business as usual. You see that second little dash line above the oil, gas, and coal emissions? That's our net zero projection. And all of the wedges in the middle there is all of the technology that you'll have to apply in order to bring those emissions down. So this is how, this is our chart for CO2 abatement. And as you can see, the clean power and electrification wedges are, without a doubt, the biggest ones that we need to tackle. Which is why our projections show that the power mix, so the generation mix, is going to look something like this, heavily skewed and built around renewables. That's going to mean a huge amount of renewable energy. So this comes to the whole tripling of renewable capacity, and our analysis shows that that tripling does actually, in fact, get us close to, is on the right track. Again, for those of you who are looking at the bottom part of that chart, this isn't going to work without dispatchable capacity. So we will see in our scenarios that you are going to still have coal and gas alongside, particularly in the power sector, in order to keep, in order to maintain that. Every sector, every market, every country is going to have a different kind of pathway, which is where we've modeled the outcomes for different countries. So you'll see those countries with coal playing a big part. There's an element of CCS that still needs to be, coal and gas, there's an element of CCS that still needs to be in there. For those that are starting with nuclear in their system, that carries on through, etc. In Southeast Asia in particular, you will see that we can't quite run away from the fact that we have to apply CCS for some of the fossil fuel applications. And hydrogen demand, again, as another critical driver of the energy transition, demand for it needs to be stimulated, and there's a lot of potential that can come from our CCS. If you ask anybody at BloombergNEF this year, they'll probably tell you this is one of our favorite slides to show, because this actually lays it quite plainly, the extent at which all of these various, very key technologies need to be deployed in order to get us to net zero. I'm very happy. Most people are taking out their phones for this one. Wonderful, yes. This is our favorite chart. We're debating whether this one goes on a T-shirt or the previous chart. But when you look at the shapes of these charts, you know, you look at the battery storage one, you look at the EV one, it's not too bad, right, in terms of that gap between the two. But when you look at the CCS, the hydrogen, or even the sustainable aviation fuel charts, that's a lot of growth that needs to happen in the immediate term. That immediate growth does cost lots of money. So when we model the amount of investment that everybody here needs to do in the energy transition, we're talking that's a difference between 14 trillion to close to 36 trillion to try to get us in that net zero scenario that we painted. And a lot of that is front-loaded between now and 2030. And remember, that's just under 12 there, a reminder that we just spent 1.8 just in 2023. I was going to end on this slide, but because I want to be invited next in, I didn't want to give Abby new slides last minute to change this slide. I wanted to actually, well, yes, these are some of the key themes that we talk about in terms of what we're looking forward to in 2024. But instead, I'd actually like to take this opportunity for all of you to announce that as of last night, the BloombergNEF Pioneers Initiative was actually just launched. The BloombergNEF Pioneers program is our annual technology and innovation competition. We're looking for tech innovators, for startups and companies that can actually help move the energy transition along. Now, every year we come up with 3 challenges. Last year, our challenges were debottlenecking power grids. We were the next generation of sustainable fuels, and also decarbonization of building construction. This year, our 3 challenges for would-be pioneers winners are, first and foremost, decarbonization of light industries. So that's paper, pulp, F&B, textiles, glass, ceramics. Ishka mentioned about the export of emissions to the manufacturing hubs here in Asia. So this is a particularly important part of the sector that we need to decarbonize, as light industries do actually contribute 1/3 to global emissions. The second challenge is further innovation in battery storage. The third challenge is something that's very close to my heart, because I'm fortunate enough to call a place like this, this part of the world, my home and where I grew up. But it's about boosting climate change adaptation capabilities. It's the first time that BloombergNEF is thinking about competition winners for this, and we're looking for innovation with regards to anything from being able to improve and maintain the quality of human life and our adaptability to disasters, to changes in water, energy practices, and anything that can actually make that life better for us. Because whether or not we're on a 2-degree pathway, the impacts of climate change are being felt today. And these are the things that we need to be looking at for moving forward, not just mitigation. I will leave it with that, as I am keeping you from break. I'll invite Abby to come back up. And if you have any other questions for the charts, any of the other colorful charts, please just reach out to me in the break. Thank you so much for your time.